Hello everyone, Professor Moneypig Trading. Today we're going to take a look at the market really quick and just give you guys a recap on April 6th, what's going on with the market. Okay, so very choppy day, right? SPY tested pretty much a year low. QQQ was at year low earlier. I'm gonna click. There you go. Yeah, if we look at the daily chart, sorry, it's a little lagging. But yeah, right now FIX is holding up at 30, so we'll see SPY and QQQ a little bounce. But look at the daily chart, SPY QQQ is still pretty heavy. And tech QQQ is the leading factor for SPY, right? Since the tech is so much concentration for SPY. But yeah, QQQ tested a little bounce back, especially SPY 405. It's been a very strong resistance, so a little bounce. We tried to short today with long put, but got wiped out really quickly once SPY touched 405. Bounced back to 411 in a matter of 20 minutes. The problem is really this 10-year yield TNX. This TNX, this is a stopping trend, right? Since March, it just rise from about 18 all the way to 30. I know we loaned some tech, buying the dips, and also have some TQQQ. I was expecting on Wednesday when Powell said the 30 to 75 bips rate hike is out of the table. We should see some relief rally, but it didn't happen, right? Thursday was a shocking sell-off, and today continued the weakness because TNX is flagging to the upside. Based on the chart, SPY bear flagging, right? QQQ bear flagging. TNX, I thought it was going to stop at 30, pull back a little bit. Looks like it's keep breaking up. It's really hard to tell when this will stop, right? There's just so many factors affecting it. FIX is a factor to explain SPY and how the market is fear. The fearness of the market. Right now you can see it's kind of topping and FIX is not breaking out. But one of the key factors we have to look at is actually the US dollar strength as well. I've been talking about in Zoom Live that the US dollar has been very strong and we will continue this trend. If you look at the US index right now, it's about 103, 104 right now. I do expect second half of this year is going to push into 130. So that means there's still about 30% of upside for UUP. Once it break out, it will continue to push up TNS. These two things are kind of synchronizing with each other. And when the US dollar being so strong, a lot of developing country stock market will be in a shit show. So that's the other thing we can potentially shorting that. But since the market worldwide has been dropping so much, we need some consolidation. But next week, if SPY break 405, we definitely will see the next leg down from here. Remember, SPY weekly still had around 404. That's the 200-day EMA or 398. I can't remember. Sorry. Well, yeah, actually we're almost there at 402, something like that. And there's some weekly gaps here to fill around 390, 380. We'll try to find those levels and mention the weekly email. So yeah, the other thing I've been mentioned is looking at those earnings that are great, and but they failed to break out or hold out the price, right? One key example is Microsoft, great earnings, and their cloud service business is doing great. It can't even hold 290. That is telling us asset managers' money is not coming in right now, and the bond investors keep selling bonds, expecting inflation hasn't peaked, which I think will peak this year. And I've been mentioning, we don't think there will be a recession. The chance of recession for this year is very low. Look at the job number, right? 3.6%, 3.8% unemployment rate. So that means a lot of job being filled. There's a lot of strong labor market. A lot of retired people at the retirement age actually come back to the job market to do the work because right now the inflation is so bad. So they have to come back and do the work. To taking care of their pension money. So in that case, the employment rate is so low, a lot of earnings are actually doing fine, with the GDP number actually slowing down, but still above 2% based on the current year projection. So the chance of having recession, which traditional definition is a GDP lower than 2%, is relatively low right now. So I think the market has to understand that, and probably will take the market and a lot of bond investors some time to digest that news and all the data. So yeah, in the short term, we'll probably will see TNX continue to push, and that will just create more opinion on SPY and QQQ. So yeah, Microsoft is an example, right? After earnings trying to break out but get rejected. So that's a sign that asset managers' money is not coming in. And same thing with Visa, right? Great earnings. Technically speaking, it should break out reasonable PE ratio, just like Microsoft, continue to pull back down. That means the asset managers' money are not coming in as well. Facebook, better than expected earnings, has some rally, got rejected the past Wednesday, Thursday, rally into 220 and now pull back. Watch the 40-day EMA cross to a downside, okay? AMD great earnings that telling us the PC market is actually not slowing as much as people think, right? So breaking the daily downtrend. We added some of the stock, but if QQQ continue to tank, yeah, this AMD semiconductor sector will continue to tank as well. So that's why I only add AMD. I haven't added any other semiconductor. Also eyeing on Taiwan Semi. If continue to tank, this thing could break the year low 90.2 to the $85 support. Patiently waiting for that to add this high quality chip maker. Yeah, most of the FANG are just in the shit show right now, right? Like Apple doesn't provide revenue guidance, and this penny fight between this 200-day EMA right now. It's a good time to add. I mean, if you have cash, long-term investment in my case is about 50% cash. I'm waiting a little bit since knowing the fact that tech is probably going to pull back down. Netflix should show a stop loss at 270 or something. Right now, continuing to tank after this horrible earnings. Looks like it's next leg down coming, breaking in a year low. Lots of tech stock breaking the year low today, guys. We'll talk about those fintech later. Take a look at Google. Amazon also day low, a year low. Google, the earnings is not as good, revenue slowing down, but still have pretty solid PE ratio here and the revenues, etc. So we started buying a little bit, but if QQ continue to tank, this thing could go down to 2100. So I'm preserving some buying power to buy more. Still like the stock a lot, just the general market condition is not that good at the moment. Amazon, horrible earnings, as we have been mentioning. Right now it's a year low, this thing. Rivian lockup period next week, May 8th. If this Rivian dip down to 25, we'll see what Amazon will do. Are they going to recognize the loss by stopping loss, or long put against Rivian, or we don't know. But yeah, if Rivian dropped to 25, it's going to get Amazon another huge blow on their next quarterly earnings with all the loss, whether it's on the book or realized loss. So I wouldn't buy Amazon right now, and not to mention their operation income is actually dropping as well, which is the lowest since 2015. Also a very negative sign. This thing could blow back down to below 2,000 in my opinion. What else? Yeah, a lot of fintech when the interest rate 10-year YAL, 5-year YAL going up like this, yeah, fintech just got blown. The other thing we have to look at very carefully is the yield curve is flat. That means the shorter term yield, like 5-year YAL FVX, is very close to TNX 10-year YAL, right? Today the difference is a little bigger, about 0.8 dollars. Yesterday it was as close as 0.4, and that's why the market, one of the reasons markets sell off so hard, right? If the near-term yield is higher than the longer-term yield, that means a recession. That's a very strong signal for a potential recession. So, yeah, people and trader investor are definitely watching that. And while the 5-year TNX are pushing up right now, look at all the fintechs. Holy shit, right? One of the growth stock fintech we've been holding, the local, Square in Latin America, down, year low. Earnings are doing fine. Revenues are growing nicely, but who cares? Rate going up, um, fintech go to hell kind of situation, right? Like this KPLT, this subprime buy now pay later, right? It doesn't matter their revenue grow, how many users they have, just get beaten. Right, if you look at all those lender names, LC, Lending Club, great earnings, but great earning only last 2 days. These days, when the rate TNX continue to hike like this, all these names just continue to sell off. The Lending Club, I think, like I mentioned, long-term investment channel. As long as TNX can stop somewhere, which we don't know when and how and where, but once it stops, start to go back down. Probably in 2023, 2024, I think Lending Club will continue to deliver, and that's the time the stock will start to rally again. Great PE ratio, good management, good revenue growth, prime lenders. Of course, the delinquency rate will be higher when TNX goes higher, but that's just the market condition. So yeah, we have been holding some, very painful, down about 30, 40, 50%, right? And other fintech, if you take a look at them, PayPal, yeah, year low, right? Today, this whole sector is just got annihilated. Very unfortunately, that's the rate hike. So we'll kind of cover tech. Let's take a look at other sector really quick before we conclude. Biotech. So usually in the last economic cycle, we'll see biotech behaving very strongly. But now seeing biotech being sell off, of course, this sector heavily rely on clinical trials. That's the other sign telling us this S&P 500 and Nasdaq are going next leg down, right? Because when those last sector in the last economic cycle, those sectors should go up. They're not holding up. That's telling us the general index is going down, right? Same thing with XLP, the consumer staples and defense. They're not holding up. You look at Costco, Walmart, Target, most of their chart bear flagging right now on the daily. And that's summarizing this XLP. So that is another bad sign. All right, the consumer sector, a lot of them holding are Amazon and Tesla, so not too surprising that bear flagging year low right now. What else? Let's take a look at financials. Getting beaten pretty hardly as well. It's because a lot of investors are still thinking recession will happen again. The data just doesn't suggest that, so we don't think that's the case. But because so many investors and fund managers think they're in recession is imminent, they're just dumping financial names as well. But actually, when the rate continue to go out like this, it's actually going to benefit financial names. So I think this sector at one point will start to bounce. I don't know when. The chart is telling us right now is kind of choppy and bear flagging. But when the market start to realize the recession is not really going to happen, which is again what I believe, I think this financial name will have a really, really strong bounce, but not just not right now. Industrial, shit show too, right? That's also telling us S&P 500 is pulling back, right? Looking at those DE, Caterpillar, high quality industrial stocks, all like shit, bear flagging right now. A total shit show. A lot of them are actually affected by the supply chain challenges since a lot of them are manufactured and they need to import some kind of either iron ores, steel, or some other kind of items from China, and they all got affected by the shipping, by the China lockdown. So this sector is just not going up right now. Energy is the other one that is relatively strong today. Since crude oil is actually pushing out. But this sector, I'm not winning them at the moment. First of all, crude oil range bound, okay? It's heavily influenced by the headline. Any headline change, this sector is gonna go up further or go down very sharply overnight. And when I say sharply, we're talking about 3 to 5% downside on XLE could happen overnight when there's a significant headline change. But yeah, this is the only sector right now. The daily chart looks like the upside, 48-day EMA cross, flagging to the upside. Watch a lot of them report earnings, increase dividend, increase share buyback, Oxy, Fend, Defund Energy. Yeah, this Oxy finally breakout. Yeah, we probably should swing this guy. I'm watching the chart, but the market is just so volatile. I was really chicken out on swinging anything at the moment except Zim. But yeah, this Oxy looks nice. I mean, we have 1 minute before the market close. I am going to lower the volume so the ring will not be too loud. Yeah, the other thing we have to look at the energy sector, which I have been quite positive, is the natural gas. Okay, this thing is bull flagging. Okay, different contract, whatever. But yeah, just any fundamental change, especially on the rig count or the inventory, this thing can up or down 10% the same day. Really crazy. Yeah, so I'm kind of avoiding the swinging those, but yeah, I'll mention Oxy in the weekly email, probably a good one. So yeah, it's kind of like a general overview of the market. Definitely look very bearish. I'm not too surprised we're going to see another 5% down at one point next week in a day. That could be a great swing day trading day. Well, Roman and I tried this morning, but got wiped out on the pop, so we'll probably try again next week and see how it goes. Forgot to mention small cap, shit ton of put option sweep. So that's telling us small caps are probably gonna have next leg down. Probably send a long-term investment alert, long in SQQQ, just in case we see a next leg down on the markets. Before we look at the flow real quick, let's take a look at the shipping. Zim is really one of the best chart compared other than Oxy and CVS, which is kind of especially retail. Well, I wouldn't say the best chart, but yeah, this daily is trying to break out this range, good earnings, etc. But yeah, shipping are doing nice. Right now, the big thing is just when China will reopen. When you reopen Zim, all those container shipping stocks should break out. And actually, what we're loaning also is the dry bulk names. They have been doing well, just range bound. And when China reopen, we should see a breakout on this sector. Again, it's really political driven, policy driven. We just don't know when this is gonna happen. Maybe May. That's most of the people's anticipation for China reopening, but could be June, July, right? Who knows what Xi wants to do, and who knows what coronavirus wants to do in China too, right? So, yeah. Before I head out, let's take a look at the flow. Yeah, this is our partner Flow Algo, so really powerful. We actually have great discount. Today is actually more call sweep than put sweep. There must be some really big orders on the call sweep, so yeah, kind of make it a bias. But right, I mean, if you look at a chart, bear flagging, but in the meantime, it's holding the year low 405. Could we see an aggressive really rally possible if there's any headline change? Small cap always have shit ton of put sweeps, so I'm not too surprised, but that is telling us probably next leg down on on small cap. Relatively weakness compared to SPY and QQQ at the moment. A lot of them are smaller industrial and financial names, which are being hurt by the supply chain issue and the recession economy outlook. Yeah, and kind of light today too, and that's why today is kind of choppy. But yeah, look at Oxy. There's some cold sweep. Facebook keeps seeing cold sweep. I mean, if we hold this stock into 2023, 2022, continue to deliver good earnings, start to beat their biggest competitor, TikTok, I do think Facebook will start to come back up. At one point, when TNX start to drop, Facebook continue to deliver good earnings. At some point, I think we'll start to push back to 250 and gradually 270, 300, vice versa, etc. Semiconductor, NVIDIA earning coming out. We'll see how it goes. But yeah, the key factor is we have to look at the GPU number price are dropping. So whether some other part of the NVIDIA business can catch out the GPU price crashing, that's the key thing to watch in their revenue guidance on the NVIDIA earnings, I believe, next week. Yeah, that's pretty much it. Let's take a look at the equity side. On the past few days, there are a lot more SPY put then called except a huge rally on Wednesday. So not very concerning level of dark pool sold on SPY. So that's probably telling us maybe the market will hanging at the low around this level, range bound, has a lot of volatilities, making it really hard to swing. Maybe on Monday, we'll see. But yeah, it's kind of like a general market overview and what you should know. And yeah, thanks for joining, guys. I need to head out and I'll stop the recording.